All right, we are here. We're live. What is up, guys? Welcome to the Virtual Millionaire Show. I have with me a very special guest, Douglas J. Beck. What's up, man? How you doing?
Hey, Michael, doing well, man. Appreciate you having me. I'm excited about having a conversation today.
Absolutely, man. So we met. I think it's been about a year ago. We met in Sarasota, I believe, at our mutual friend David's event, and I think we really just hit it off when we met, and it was really cool to kind of hear your story. But I want to share just what's possible when you put your mind to something today, and your story is going to resonate with a lot of people. So for people who are tuning into this live, make sure to let us know where you're coming in from first and foremost. Share this to a friend. um, Doug is going to be dropping some major value today. So for people who don't know who you are, man, kind of let's just start there. Take us back. Who are you? How did you get into real
Sure,
estate in 2014?
sure, man. Appreciate that. Thanks again, and blessed and honor to be here with you, and also for David who helped us get connected, and for the things he's doing for all the people he's helping impact as well. So thank you to David for
Absolutely.
making that connection. Yeah, I think it was what last year or yeah, last year. I don't remember what the date was, but it was in the wintertime. I think it was a little cold outside still. So I
I
remember
think it was January in Sarasota.
Right.
Yep.
Yeah, exactly. So we pushed. There's another one coming up. He's got another thing coming up in February. So I'm trying to think if it's going to be as cold or not. But anyways, yeah, back in 2014, man, I was still working in corporate America. So I got my start in business working for Johnson and Johnson. I started out of school. I went to Rider University up in New Jersey, business degree, entrepreneurial studies, and also computer stuff. And basically went into J&J and their leadership program. And the reason I say all that is because that kind of set the backdrop for me as far as how I got my career started, but then ultimately what I eventually found out wasn't what I wanted to do. And kind of, they say it's not always about finding what you want to do. It's also figuring out what you don't want to do. So as much as it was a blessing and opportunity at the time, and my dad was really the pioneer because he had worked at J&J for over 40 years and he had already been retired by the time I was going there to start working. But essentially I got my start in corporate IT basically and procurement. And then that led me to realize that as much as like you can make a lot of money working in a big company and helping make a lot of things happen for the company and be an important part of the team and all that stuff, you kind of get lost in the shuffle. I always tell people, like, I remember having to type in my number, my corporate ID, which was 371976. Like, I just remember it to this day because I've typed it so many times every time I go to the gym at the office, or every time I'd have to say it's like the worldwide ID, right? That was the thing. So that was like almost like a little bit too much. Like, identifying myself as a number just became too much, and also the cubicle lifestyle, the box lifestyle, that just didn't really work out. So I had been exploring different types of business stuff on the side, and knowing that I had skills in like IT, like doing websites and marketing and things like that. My family had small businesses since I was a kid, and so I've been around small business, but I never had really my own full blown small business. It was just more like a side hustle. And so and I was just tell me if I'm going too far or too deep here, man. I just want to make sure I know what the flow your audience is expecting. So feel
Yeah,
free.
so just as a reference point, keep going by all means. The audience is going to be a lot of people who may be doing exactly what you're talking about, which is working at that job,
Okay.
and maybe they've done a few deals, but they're afraid to take that next step and jump into real estate, and they don't really even know where to get started or how to make that leap because it's scary, right? And
Right.
they might be feeling what you're talking about. They might be feeling like they're a number right now.
Right. Might feel stuck. You might feel like, nobody's paying attention. You have ideas, you have, ways to improve things, like, especially if you're a technical person or you have marketing or sales or business or anything like that. You're just an idea person, a guy or gal. It's hard to get those things heard when you're in a very bureaucratic sort of governed, system like that with corporate America. So, and I don't want to go down the path of sounding too cliche, because it's really not cliche. Like, literally, this is what happens. And I lived it. So I know friends of mine that are still living it. People come in, hey Doug, like, can we somehow like work together so I can like make that jump and stuff like that. And so it's a shame because there's not like a right way for everybody to do anything in life. I think that's one of the challenges. Like, it's always like, go to a good school, get a great job, and then you're good to go. Like, and it's not the case really anymore, especially with the way technology is. Like, look at us, we're talking from two different states across the world. Probably people can hear this message and stuff like that. So it's just so cool. But you asked how I got started. So that was the backdrop of like corporate America lifestyle. And then, of course, at that time I was at J&J. I got married to my wife. We had our first child back in 2011, my son Jacob. And that was a big catalyst as well, really amplifying the lack of availability of my own time, having to legitimately work, 8, 10, 12-hour days consistently and not be able to go to his events, his sports, things like that. Like, even at a young age, trying to get him into stuff like playing with him after school, things like that. Just whatever it was frustrating. So I had already been like looking into different things to do on the side to kind of supplement income to be able to start making sense of leaving or making a transition of some kind. And I tinker with different things, different side businesses. I got into some network marketing. I learned a lot from that. I got into some IT stuff as well, like I said, doing website development, things like that. But didn't really make a lot or enough money to make the move to leave until I fell into real estate investing, really. And I think I was talking to a friend of mine back from college, and I had asked him to take a look at what I was working on, which was a network marketing company in the energy space back then. And it was 2012 or 20, no, I guess it was 2014, I guess, because I started that business in 2011. Literally the year my son was born, I said, I got to do something. And then, like, for whatever reason, God just put in my life, he's like, hey, you got to go look at this thing. Maybe it's not this, but it's a step to the right direction. Like, you got to be an entrepreneur. Like, you signed up to do this when you went to college, you studied entrepreneurial studies. Like, I knew it was in my heart, but I just was stuck in this corporate sort of matrix. You know what I mean? I was like, I even had my LinkedIn profile at the time. I remember, entrepreneur and a corporate, what was it? Corporate entrepreneur, I think I called myself, or something like that. It was my brand of my head was like, I don't belong here really. I just need to get out of this somehow, but I don't know how yet. So, anyway, I went into that. And then as I was looking to grow that other business, it was more or less an internet based business, but I was talking to my one buddy to take a look at what it was all about. And he's like, look, man, it's like, I appreciate what you're doing. It's like, I'm not against it. A lot of people are like, hey, leave me alone. I don't want to hear about that. It's a pyramid, that thing. But he was like, at least open-minded to it. And he said, the thing is, I'm making like a lot of money, like 30 grand a month. He told me, doing like this marketing stuff for real estate. And it wasn't wholesaling. It wasn't fixing and flipping. I think he was helping people learn about real estate in some way, like telling about other people's courses and stuff like that.
So he's
But
an
it got
affiliate
me,
basically for the
like an
courses.
affiliate, exactly. Yeah, he
Yeah.
was like an affiliate. Yeah, he was like affiliate marketing, and I'm like, I didn't know really what he was doing precisely. I just knew what he said, and it was kind of like Chinese to me, sort of like it was like jargon. But I did research like the letters at the time. It sounds crazy. I didn't know what he meant by REI. Like I just didn't know. I knew like real estate, but I didn't know like REI. So I typed in REI, and then like Google gave me whatever the results were. I can't remember, but one of the top pages when I figured I was real estate investing was actually the Facebook page, real estate investing, which happened to be the guy out of Arizona, Cody Sperber, who actually was my first mentor. So I fell into his funnel and I ended up signing up for his mentorship program. And I didn't know what I was doing really. I just, I shortcut through a few things there, but I got all this information. I'm like, how do you assign a contract? How do you wholesale? Like, this is crazy. I never heard this before. I know what real estate is. I bought a house, but I just never knew you could flip a contract. And so, yeah, Cody was the one that kind of got in my face, like virtually, in 2014, and kind of showed me what it was about. And I was like, this is really cool. Like, if I can make 5, 10, 15 grand every deal, if I do like one of those a month, I could pretty much leave what I'm doing full time and just do this like, all the time. So, that's how I got started. I mean, I could tell you more, but I mean, there's a lot of different parts as far as what happened after that. That's kind of important, I think, because a lot of trials and tribulations, but I don't know if you want me to keep going or what.
No, we'll unpack some of this stuff. A lot of good stuff here. So, Cody Sperber, man, I didn't realize that he was your mentor, but he probably made a lot of people excited about real estate. The Lamborghinis, the Chase Bank checks, and all that stuff. And really, it's almost unbelievable to realize that in the beginning you can cash 10, 15, $20,000 checks from literally not even owning the property. And so it's cool to hear that that's how you got started. But we typically have some sort of a belief that it's going to just be, you're going to jump right in and it's going to happen overnight. And I'm always curious, like, how did your experience go? Like, once you decided to invest into mentorship and get started, how long did it take you to get your first deal?
Yeah, no, great question. So that's kind of the next part of the story, right? So it's like, man, I was ambitious, so I'm still sitting there working full time every day, but I'm like, I got the answer. Like, this is it. This is the ticket. Like, I just dropped like 30 grand. You know what I mean? This is it. I know this is it. I talked to my dad. He's like, you sure you want to do this? Like, this sounds like a lot, and I don't know if this is a good idea. Who's this guy? Like, you met him on the internet. It sounds like a scam, maybe a little bit. Like, what's going on here? But long story short, I mean, I said, look, it's either going to be this, or I'm going to go get my MBA, or I'm going to start another business, or I'm going to do something else. Like, I just can't take the corporate stuff no more. I just got to get out. So he's like, all right, well, he's like, go with your gut. And I talked to some other people, same thing. So anyway, end up enrolling with it and got a lot of great information and a lot of great mentorship from some of his team. But I would say the first deal I had under contract was probably legitimately a few weeks after getting into it, under contract to buy. That's the challenge, though, right? The
Not a deal until it's a deal,
yeah,
right?
right. And I mean, the wholesaler dilemma, I think, is you could have what you think is a great deal, but is it really, though? You know what I mean? So, and that's what I realized from taking action, though. That's what I have to say, like, for the audience, if you're out there doing deals or looking at deals, like, just take some kind of action, because I always tell people, like, again, it sounds cliche, but literally taking imperfect action is so much better than just like thinking about doing it, because you'll learn, you'll get a feedback mechanism of like what it is that it takes to get there. So that's pretty much what happened with me. So as much as we got the first under contract, I didn't know how to estimate repairs. I'm looking at this 2 family house in central New Jersey, thinking it might take like 15, 20 grand to fix it. I come to find out, know what I know today, probably would have taken 70 to 80 grand to do what had to be done to make that thing worth what it would need to be worth to sell it for a wholesaler, as a wholesaler, to somebody else to either keep it as a rental or to flip it. So it's just, you learn by doing it, I guess. But I did that, and I had to go through some difficult conversations with sellers, and I was doing direct mail marketing. I was doing a lot of the traditional sort of models of marketing and stuff like that. And so a lot of churn, a lot of time on the phone in between meetings, taking calls, trying to set up times to make sense of my schedule. And literally the actual first closing that I had, though, wasn't until about 6 months in. So that first 6 months was pretty much learning and doing, and I was ready to give up. I mean, I literally had calls with them saying, guys, like, this isn't working for me. Can I please have like a partial refund or something like that? Because I feel like I just burned through all this money and I'm not making any money. I'm spending like 2-3 grand a month on marketing, not getting any actual closings. Like, I'm into this for almost $50,000 at that point. Even though I'm making decent money, I wasn't prepared to spend that kind of money to get to a result of just like a $5,000 or $10,000 check. So bottom line is, the aha moment, which I can get into if you'd like, is kind of like just kind of the pivot, right? It's like
Dude,
pretty much,
like, just hold on just a second. Like,
yeah,
this is so identical to my story. It's not even funny. My first deal fell through. I got my first deal at 6 months, but I had the same feelings, man. I feel like a lot of people who are out there who have invested, that's an expectation they need to be understanding of. It's like,
right, yeah.
you go literally your deal, your first deal is everything. How important was that first deal to you, man? I mean, when you finally hit that first deal, and then obviously sorry to interrupt
No,
your
you're
flow
good, man.
there.
No, it's totally cool. I mean, it's a lot of folks. I think, you and me are probably in a lot of company here as far as people. It's a lot of hitting your head against the wall, like feeling like, am I doing the right thing? You second guess yourself. You're like, man, this doesn't work. All these crazy ideas. Like, it's a really a roller coaster, even more than like the entrepreneurial roller coaster sometimes we face, where like good days, challenging days, whatever. But this was like in the beginning, it's always the hardest because you haven't seen success yet. It's really hard to conceptualize. That's the part I think that happens, to your point about when you close that first deal. It's like, okay, I actually see how this thing works from like soup to nuts. Like, I go into contract, I find a interested party to sell. I find what the deal was going to be, like as far as the analysis. I figure out if I can get to a great price. I get to a great price. I get under contract. Okay, great. I got a contract. Now I got to go out there and get that investor to buy this contract from me. Well, I got to find someone. I got to know who my people are. I got to know what they like to buy. I got to figure out how to market to them, talk to them, et cetera. And like all that stuff is like a lot of things to do. It's not going to happen like a flip of a switch. I mean, I would say unless you have like an unfair advantage, like maybe you're a real estate agent or you've been around investing or something like that, some of the concepts. But if you're coming in totally like fresh with like no really experience at all of any related experience, it's going to take you usually, weeks, if not months, if you're doing the right stuff and doing it consistently to get your first deal, typically. But with me, after that first deal, like it turned on a lot of, like I said, the awareness, and I understood things better. So I figured like, that first deal, it's important to mention, like that was a joint venture wholesale flip. So essentially, I found an investor who was in my local market, which I think is a very important piece of advice I'd give to anybody here listening. Is like, you could like go through coaching, education, mentorship, YouTube, listen to podcasts that we're doing here, everything like that, but find somebody who's local that you can actually transact with, right? Because then you say, okay, this person's in the market where I want to operate, which is either my market or whatever you're doing, virtual, somewhere else, and they have what I need, what they have, what I don't have. So in this case, I didn't have a deal that made sense. So I found a guy that had a deal. And then what I did is I brought the investors that I already built up a list of from doing the other stuff I was doing. So I figured out that I can do that. And then we can go into an agreement where we joint venture. And man, it was only like $5,000. It was a little less than $5,000, but that 5K was worth more than the 50K or 60K I was into it already. It just was like, boom, now I get it. And then after that, the same year, that was in August of 2014. Like real quick, we closed like another 6 deals because I knew I was onto something now. So now I was like, who else do I know that has deals? Let me talk to them. And then continuously diving deeper, and then taking my same network to those deals with some paperwork involved. And then essentially from there went like 7 deals and like 20 some deals and like 50, 60 deals one year. It's like, it just kind of grew. So that's how it kind of went, man. But it's that closing, like you said, when you get to that closing, it makes a big, big difference.
Yeah, it's a belief that you can't even explain, that when you actually pick up that first check, it is, even if it's $1, like it changes your life. And so can't stress that if you are out there listening to this and you haven't done your first deal, like keep going. Do not quit.
Absolutely.
Contact somebody like Doug, contact somebody like me. we're all willing to help. It's a relationship business. And I know we're going to talk a lot about relationships today, on how powerful just being in the room, surrounding yourself with the right people, and
Absolutely.
not just like having a one call in conversation, right? It's a continuous thing. So let's talk about that, man. How
Yeah.
how how important have relationships been? How important are they continue to be, especially in this kind of uncertain times right now that we're in?
Yeah, totally. I mean, I'll give a couple of examples on that. So, I mean, I'll talk about some of the stuff as far as the wholesale side, and in full transparency for the audience, like our companies, we have multiple business sort of segments. So we have a wholesale company, we have a fix and flip company, and we have a title insurance company. We have other things we do, like coach and stuff like that. So the thing is, on the wholesale side, like wholesale was how I got started. Wholesale is how we pretty much made our bread and butter for a good period of time. When COVID happened, things shifted a little bit, but I still have that experience of doing literally hundreds of deals, like 200 some deals that we've done as mostly joint venture wholesale deals, which I like to do because you collaborate, right? So you talk about relationship building. So if I'm looking to joint venture, like some people say, well, Doug, how can I get to a deal within the next few weeks? Like I got to close by the end of this year, but I got to close to get something for Christmas. Like if you were saying that to me now, and you had very little experience to do anything with real estate investing, you literally could sit in the middle between two parties. Now, I'm not saying to create a daisy chain. If you don't know what that term means, I'm pretty sure Michael might have touched upon it before. But if he hasn't, like, you don't want to have like 15 people in a line saying, "Oh, I got this deal, I got this deal, I got this investor, and I got this other investor." No, it's if I'm working directly with somebody that has a deal under contract with the seller, but if I sit between that party that has the contract and I have another person that has an investor, that's probably the furthest I would go. But I like to be the one that has the direct investor who's going to close. That actually is the cash buyer or the hard money lender type of buyer. And that's what we predominantly have done at JDL. Like we've pretty much worked with refining our list of investors to where we focus on dispositions. And dispositions is as in like selling the deals that get presented to us that make sense to sell to people that we know are looking to buy those deals. And I'm not selling real estate though. That's a very important distinction as well. I'm actually selling the contract or selling the rights to buy the property. So I'm not acting as an agent, right? So I'm working with my investors, but those relationships, Michael and everybody else, like I need to make sure I know by having conversations. And I've grown a small staff and I've grown bigger staff over the years to like develop and understand those preferences and understanding who are the real players, if you would, in terms of buying, who are the investors, who are the critical few or 10 or 20 that we can work with on a consistent basis. And just down here in Florida recently, like, I'm proud to tell you, and I don't know if we talked about this or not, but like I've done a bunch of stuff in New Jersey. We've done some flips in Florida, but I hadn't actually done a wholesale flip in Florida until just recently. So we did one down at Fort Myers, and it's a great example because somebody in one room that I attended, sort of like a REIA room, had a deal. They presented it to the room, and I heard the numbers. I'm like, I don't know. I think it might be something. I said, let me see who I know. And I made a few texts, actually. It wasn't even a phone call. I texted 4 people, and the 4 people I knew were borrowers of mine on the lending side, which I know we're going to talk about at some point. So we'll get into that in a little bit. But there are 4 people I know that are reliable to close because they actually are pre-qualified for lending and stuff. And I'm like, these guys would buy this if it made sense. Let me get their feedback. So literally sitting there, hearing the deal in one room, making 4 texts out to 4 people. The 4 people, I got 3 back saying no. I got 1 guy who's interested. Okay. The 1 guy who's interested is a builder. And he said, yeah, I'll go take a look at the property, see what it's all about. So he went to look at it. I trusted everybody in the equation because the people at the one meeting I know him for a little while. The guy I know is a borrower. He's reliable in a relationship that I've built over time. Again, conversations, like you said, over time, not just like one. You have to have continual conversations. Check in. How can I add value? What can I do to make, what can I do to help grow your business? What can I do to add more money to your pocket? Like people are money motivated in real estate investing, right? That's what they want to make more money. It's just the simple way of just putting it. I don't know how else to say it. So, but this gentleman, he's a builder and wants to renovate this property. I was able to leverage that same model, but then with the relationships that I had built in the one room with people seeing the same person consistently every single week. This one room meets every single week. The other one is more on the relationship with the investor, the buyer, the borrower, right? And by sending out those 4 texts and a few calls in between, within a couple of days, really, we had a contract, and our company made 10 grand. I never saw the property. I never actually met the other guy, the borrower. I never seen him in person. I just know who he is. We talked on the phone a bunch of times.
You know what I love the most about this, Doug, is this literally cost you maybe an hour of your time, like
a couple hours.
But yeah. Okay, yeah. So the point is though, it costs you your time, which obviously that takes some time away from what you're doing. But what I love most about it is you did not spend a penny on marketing. You invested your time into the relationship, and that will serve you for the rest of your life. And while that's important is because a lot of people think that they have to have a ton of money to get started. And with what you're talking about, you have to have $0. You just have to have the time and bring the value to these people who are involved with this equation,
That's
right?
right. Yeah, I can't emphasize. You said it perfectly, Michael. Like that's exactly right. So if you think about the concept, and it's not too fancy a way of saying it, but just think like a transaction is just that. It's one transaction. There is a need, and then a need is met, and it closes, and we make money. But the question is, how does that transaction persist or not? It usually doesn't persist. Like one seller, unless they're like an investor, they have a portfolio, is usually just one seller of one property. So when I think of like building relationships, I'm less interested in me personally, at least, I'm less interested in building relationships with sellers unless they're investors because I don't have anything of any persistent value. I look at building relationships with people that can be buying something or doing something with me many times in my lifetime, right?
Repeat customer, like
Yeah,
lifetime value of that.
LTV, yeah, lifetime value essentially, right? So it's like persistent though, like because like you and me, for example, there's a good chance that we're going to do some business hopefully in the near future. We talked about some different things, and I know that our relationship, as we nourish that, nurture that, and we look to how we uncover opportunities, like it's on as long as we can get along and do good things and make money together, like we're gonna continue to do that for the rest of our life, God willing. So it's like, and I've seen that firsthand with people in New Jersey. So what I found is like I like to build relationships with investors that have deals, and I like to build relationships with people that want to buy the deals. It's really that simple. And I coach my clients like just literally make a list of two. Like you're sitting in the middle, you're the line in between. Is there an investor that has a deal and there's an investor that buys a deal? I'm sitting right in the middle. Who do I know already and who can I find that has a deal? Who do I know that wants to buy a deal? And where are there marriages or matchmaking that I can do in between? And how do I put some paperwork in place to make that happen?
Yep. You know what I'm so excited about is you said that we're having conversations about things that we can do to work together. And this morning I just realized that we had a lead come in New Jersey. And
Oh, come on.
who do I know that's in New Jersey? I
Right
know
here,
two
man.
people. Yeah, I know two people. And guess who I'm going to talk to about this lead after we get off this podcast? So
Hopefully, me, man. That's right.
yeah, absolutely, because yeah, we're nurturing that relationship, and out of sight, out of mind, right? So
Right.
yeah, I just had to mention that because it's pulled up in our CRM, and it's like,
That's awesome.
gosh, we have a incoming web lead. We've
That's
spent the
great.
money on the marketing, and
Yeah.
how can we partner on this deal, right? So
Yeah. And
anyway,
honestly, I think a great wholesale dispositions focused wholesaler is going to say, how can I make like someone like Michael's job easier? So like if Michael's really good at acquisitions and getting people to say they're interested in selling property, he knows how to analyze deals and negotiate and all that stuff, and he does what he does really well. He doesn't necessarily want to, maybe he does, but I don't know. Some people just want to focus only on acquisitions. They don't want to deal with the
yeah,
investor stuff and dealing with like, well, maybe I'm interested, maybe I'm not, making lowball offers, trying to negotiate. Do you have funding, getting cash, POFs, all this other stuff. It's a lot of stuff. So our thing is my company JDL up in Jersey, and we do it in Florida now. We focus on going, our mantra is from contract to closing, pretty much soup to nuts. From the time anybody presents a contract that makes sense as a deal for someone to buy as an investor, if we take that soup to nuts, full service, if you would, to closing basically. And so we want to make it to where you don't have to do anything. We're essentially a partner on that deal in its fullest extent on the deal by deal basis. And then ultimately up in New Jersey, we've done some scenarios where some of the biggest acquisition companies in New Jersey, especially the ones that were doing like auctions, sheriff sales, online auction type stuff that would win deals. We've done dozens of deals in some cases with some of these companies where they just focus purely on acquisitions, and we're just an extension of their dispositions arm. Essentially, we're an informal partner, effectively. So yeah, I mean that's the greatest thing. Like for me, what I always tell people, like, what do you have and what do you need? So if you have deals, you need investors, and if you don't want to talk to investors, you don't have time or interest in that, just find someone that has investors. If you have investors, then you need deals. Talk to someone that has the deals. It's really that simple. Like it's just match and making. It's not. Let's not overcomplicate it, as they say.
yeah. So we found out that our unique ability was acquiring property. We're really good at marketing and sales and getting the absolute best properties, and we found that we can't do it all. And so we found a disposition person that's all they do on our team is they just develop relationships, they network with buyers, and they disposition properties. That's it. And
Yep.
so if somebody's out there like in New Jersey or in Florida and wants to, connect with you in your relationships, what's the best way to do that and to do a joint venture with you, Doug?
Yes, I mean, if it's on the real estate side, as far as wholesaling specifically, the best way probably is to go onto my website, which is douglasjbeck.com, and to fill out the form. There's a form on there. I can't remember exactly the clicks. I apologize, but it's probably like a contact me or set up a conversation type of form. You can also check out jdlventures.com. So jdlventures.com is our actual current, the website that's there now. It's going to be changed around a little bit, but that website is essentially our real estate investment focused website, which you can go on there and say, yeah, I have a deal or I have this need or I want to contact you guys. That's going to go into my company queue. The douglasjbeck.com will probably go directly to me. So essentially, that's the best way for right now. Now, obviously, if you know Michael or you want to make a connection, I'm happy to have a conversation in private on Facebook Messenger, or on the phone, set up a Zoom meeting, whatever. But if it's just like a random person in the audience, I think that's the best way. Connect on the website and then kind of take it from there.
Beautiful.
Yeah, yeah,
Yeah, so I just wanted to plug that before we moved on to the next segment here. So yeah, guys, check it out. If you have a deal in either of those markets, make sure to hit up Douglas. And then also, we just launched a partner launch program as well. So I'm gonna plug that too.
go for
It's
it.
rockethomebuyers.com/partner launch program. I'll drop both the links in the comments here. Obviously, we're more heavy in the Midwest, so contact Doug for those deals. Make sure to hit us up in the Midwest. But
Excellent.
also, Doug, you have another. You mentioned this earlier, but you have another venture going on that you're able to help a lot and help and service a lot of investors through through lending as well. Can you talk a little bit about that?
Sure. Yeah, totally. So kind of just rewind a little bit. So I guess I should probably go from first deal through, like, we've done a bunch of wholesale. I've done about 50 fix and flips. I know Michael's got a big operation there running. He could tell you himself how many he's got going on, but it's pretty impressive last time I heard. So basically, I've got a lot of that experience, but I realized maybe a couple of years ago that I wanted to get into something that was more scalable in addition to the wholesale, not so much the fix and flip. I've attempted to scale fix and flip, and for a lot of reasons with construction and different things, it just became too much to manage for me personally, right? And everybody's different. Everybody has different skill sets, but for what I was interested in the most, it just wasn't the right fit. And so we've got one renovation going on up in Jersey still, and we have one we just kicked off down here in Florida, but that's going to be a keeper. The one up in New Jersey is a sell. Essentially, I'm looking to build a portfolio, but what Michael mentioned there is really on the lending side. So I think it was probably like April, May of, I think, last year, was it? Yeah, I guess, is when I was presented with an opportunity to join a fund. So I actually looked at it, I analyzed the situation, said, okay, here's where I'm strong. I have a network of investors. I have just north of 10,000 people up in New Jersey, predominantly, mostly New Jersey, but maybe like 1,000 or something like that at that time down here in Florida. And they all want the same thing, which is they want to buy deals and they want to borrow money usually, or invest their capital that they have, or leverage, right? Leverage. And so where can I take what I already have, which is a network, and essentially almost like an affiliate would take that network and figure out ways to help them, but also make money at the same time, right? How do I monetize the situation? I mean, we're all here entrepreneurs or looking to be entrepreneurs. So I think you got to think like, how can I work smarter, not harder, right? It's like, okay, well, I already have this thing. This is my asset called people, and I have a network and connection with them. Let me take that and bring them over here to this thing that makes total sense. And so the opportunity was to do that in New Jersey, but also to expand that fund's operations in Florida. And so by doing so, I was basically, I already was networking a lot, but I just took it to the next level. I was attending literally 3, 4, or 5 meetings a week networking down here in Florida, which helped me build my network, which is persistent for me anyway, like I said before, but at the same time, taking that network and helping them get capital through that fund. And so, we did a bunch of lending, millions of dollars of loans done while I was working with the fund a little over a year. And I got an awesome experience inside the fund. I anticipated on staying in that fund for a lot of reasons. Things changed with lending not too long ago. Actually, earlier this year, a lot of things happened with the rates. It created a lot of havoc, and it created a lot of strain on the fund. It created a lot of strain on me personally with the amount of time I was putting into that. So it just became too much. And I decided to step away from it, from the perspective of being inside of a fund and doing operational type stuff and being transactional essentially with those individual loans. What I've evolved to, though, is we built a brand up. We still work with that fund, but more as a broker. We've evolved to a sort of situation where if you're listening to this, you're anywhere in the United States, pretty much all 50 states, United States, I can help bring capital, commercial loans to you through realdirectlending.com. So realdirectlending.com essentially is the website. And what happens is the current state of that site is that you go on the site, you learn a little bit about it. You have, the information. We'll put more videos up there pretty soon. We're going to do some more education through the site as well. But effectively on that site, you'll also see how you can submit a form, like an application, effectively a mini app, to say, here's where I'm at, here's where my credit's at, here's where my situation is, here's where I have a deal, I want to get funded, what can I get, how does it all work? And then that would start a conversation with someone from my office. We would understand where you're at with your deal, whether you're looking to fix and flip, buy and hold, whatever you're looking to do. And then effectively, based on your circumstance, we would see where is the best match, either the fund I worked with up in New Jersey or somebody else that I know, even private investors sometimes. And the cool thing with me is that I'm not just a broker because I have the experience of dealing with it myself. I'm a borrower, right? So I can help you understand the numbers and kind of educate you in the process, really as part of that process anyway. And so wherever you're at in your spectrum, whether it's brand new or you're already experienced, like we can definitely dive a little deeper with it. But if you need capital, that's a great place to start. We can get up to 90% typically loan to cost if you're well qualified as far as your credit and also your experience, and as low as like 80% typically is low end. but that's on short term actual loans as far as like 12-month or less, like interest only type, fix and flip loans, renovation loans, and it's also on long term. We have 30-year loans available too. To be clear, it's not residential though, so I'm not NMLS. It's not like a traditional mortgage where you have to have all the different aspects of like what is all the different things like the compliance things. It's not that. It's more or less LLC or entity type loans for residential or commercial assets. So we do have some programs available for like the commercial type of things. But my core is pretty much 1 to 20 units, maybe up to 30 units is what I'm most comfortable understanding and underwriting and knowing. But yeah, anybody here has a deal or looking at or has something that they're trying to buy, they need capital for. That's one piece of it. And I'll just say the last piece of it is that because of my network, also, a lot of times I'm able to connect people with what we call gap funders, right? It's people that want to actually put capital in the part that we're not lending. There might be people I know, even myself included, that can participate in a deal. So if you want to get to that 100% funded model, like that's doable. And so one of the things we're working on behind the scenes, and we're hopefully going to launch this in the new year, is having a full holistic, like almost like a joint venture type of program available where leveraging the lenders, the lender that I work with mainly in New Jersey and others that are coming soon, and then ultimately the gap funding source, which is either going to be a loan or possibly a partnership or participation. That's being worked out. That's more to come. But the fact is, like in the meantime, that can be done transaction by transaction and borrower by borrower. So depending upon your experience level, right now it's like very tough to do because you have to have a certain number of deals done and certain credit and things like that. But if you have maybe you're just getting started and you're looking for a partner, I'd be open to it. But I'm kind of like not prioritizing that right now. That will be more of a thing as we grow our base, and then eventually, and this is my last piece of this, we're going to make it more of a marketplace style, not for you to have to go shopping, but actually you submit one request and kind of how Home Advisor works where you get multiple quotes. We're going to have lenders competing for business, right? We want people to have the style where like you actually get the best deal available in the marketplace as of right then and have it be systematic because we think that's the most fair. That's creating an environment where you're getting the best deal. Lenders have the opportunity and then lenders can start participating on this platform with us. So that's the bigger picture vision, which you guys are one of the first people to hear about that. Actually, my private community knows about that, my coaching group, but I wanted to share because I felt like it's the right thing for your audience to know about that.
Yeah,
So
man, that's huge. And yeah, if you're paying attention to this, you definitely need to check that out because I've never heard anybody do this. As far as making them bid against each other, usually the platform is like, okay, we can name our price because that's just what we can do. They don't
right,
have any other option, but like you have multiple options. It's like what fits you the best, right? So I love that, man. That's awesome.
right. I mean, because it's also especially on like the long term stuff because there's a lot of things happening with the capital markets on like long term financing and with bond markets and things like that. It gets very confusing and you can't really tell like is this a good offer, is it not a good offer. So when you get a lot of different, it's not so much like we don't want to flood your inbox with like offers from lenders. That's not the goal. It's really to have us be the intermediary to help you figure out what's right and kind of talk about it and consult with you and understand. So that way you get the best deal as a borrower, and then we also help serve you as more of a consultant versus just a connection to a lender that you can kind of find on your own by just doing a Google search.
Yeah, 100%. I mean, it's a no-brainer. Honestly, having another alternative solution because right now more than ever you need to have multiple options when it comes to lenders because I didn't go through 2008, but so from people I've talked to, your funding source, if one of them just completely stops, like you need to
Yeah.
have other options. So what is happening coming from somebody who's in that space right now in the capital markets?
Yeah. I mean, well, what's happening is, I'm not the guy that's the corporate finance per se, but I know enough to tell you, essentially, like the treasury bond market, essentially what it boils down to is if investors that are buying commercial backed securities, like mortgage backed securities, are looking at what their alternative investments would be, and they see that there's the same or better opportunity to get returns of spread on something that's not related to commercial backed securities, then essentially it changes the demand essentially for buying those notes. And so essentially think of it like when you and me, let's say we buy one property, we get a loan. Every loan that's done is then put into a pool, basically. Typically, it is with funds, and they package those up and they sell them to the investors that buy the commercial backed mortgage security. So essentially, commercial mortgage backed securities, excuse me, and they essentially say like this is going to be the price. So they sell it at a discount and then they keep a spread. Usually, that's how it works.
Yep.
The thing is when things change in the markets and when inflation's come into play and you have all these different things happen macroeconomically, like it creates a different place where like the cost of capital gets higher, investors' preferences, they change. Investors are looking for better returns for the risk that's coming and things like that. So there's all these different things. But really, like I had a call today with somebody in one of our sessions, and basically it was like somebody said, well, why would I go for like an institutionalized type of solution, like a fund? Why would I go to a fund to lend money when I can go to an individual investor who has the capital to lend it to me? I said, well, that's a good question. You would want to go to an individual investor if they're going to give you terms as good or better than what you can get from a fund. But other than that, it's not scalable though. So like if you're looking to do like 10, 15, 20 deals at a time, or even just a few, like you might not want to have just one investor because they could change their mind. They could say today they're lending, tomorrow they're not. Or right now they are, and later on they're not. So institutional type of investors, if you would, lenders, funds, essentially family offices, those kinds of groups, which is what I work with. I only work with the larger type like that right now. I do have investor friends that would do it on a smaller scale, but that's not the point of this whole thing. That's more for the gap funding part, right? That's not so much for the larger scale. So the institutional ones, they're reliable to close, right? And the thing is, if they don't, like, there's a reason that's bigger than we can understand. Usually they're not going to close, or they're not going to honor whatever they quoted you on. There's no rate locks with commercial lending. That's one thing that's not that good. Like, you can't guarantee a rate. But I would say, when you're looking at scaling and kind of growing something that's bigger, you want to have at least a couple of options on the scalable model where it's like institutionalized, and then have a bunch of individuals as well. Why not, to have as backups as well, or maybe primary, depending on how you look at it. I will say though, one quick PSA for the group here. I know Michael knows this probably, but there was a lot of scammers online. So you have to be careful, like in these Facebook groups, stuff like that, where people are posting. I know we're all part of these different groups where they'll say like, oh, 4% for 30 years, 50 years, 100 years, whatever you need, like no cost, nothing like that, no prepayment. You can do it for as long as you want, no problem. And it's a Gmail address. Like somebody just showed me one the other day. Right now, there isn't any lender that I know of, literally none, zero, offering like 5% for 30 years with no prepayment, nothing like that, that's actually lending money. And if there is, I literally told someone today, like if you know somebody that's willing to have a loan out for 30 years and not sell the note and keep it at 5%, like it's either there's something really funky going on there, or there is actually a person doing that. If there is, we should start another fund and be the one lending it out
Right.
at 3%, because that's where there'd be a lot of money made. You know what I mean? So it's that simple. It's just, you got to think, like, practically speaking, the norm right now in the current environment's like 30-year money is basically between like 7 to 8.5% on commercial loans, which it was at 3.5%. And our mutual friend David closed like a bunch of loans, like almost a dozen and a half loans at basically that 3.5 on 30-year fixed, right before the rates got crazy. So it was in March 6th or something like that things went up. And then it went in March, April, it bumped up another point, and April, May, another point, like creeped up. And then now we got the residentials above 7, I think, or it went down to 6 and something, but now it's back up to 7 something. So it's tricky. But the short-term money, let's give tolerance so your audience knows, like short-term money, as far as like the hard money, quote unquote, the private money lenders that are going to lend on the purchase and renovation, typically you're looking at somewhere between, it was like 8%, but I'm not seeing lenders ending at 8%. It's usually 9.5 on the low end right now, up to like 12, 13%. It was, again, like 8 to 10%. Now it's like up another point to point and a half on the low end. And
right.
So that's kind of what you're expecting. So generally speaking, figure 10, 12% interest only, with a couple of points typically on the short-term money. And then on the long-term, it's going to be somewhere between 7 to 8.5% typically, with a couple of points typically.
Yeah. Yeah. So, I by the way, dude, thank you for the explanation. Super valuable stuff. I learned a few things in that. So what do you say to somebody though, who might be listening, being like, oh man, like now is not the right time to buy. The rates are too high. But I have this great deal. I have this fantastic deal over here, but I don't want to pay 13%. What do you say to that person?
Well, yeah. First off, congratulations for finding a great deal. That's awesome. Let's talk about it, because I might be interested, or know someone who's interested. That's first thing. Let's not throw it away. You have value. There's an asset, and just getting the contract, winning the deal is an asset. Like both Michael and I are here to tell you that, because we both done that and do that as a business model, where just getting a great deal is one of the most important things, right? That's where it all starts. And so as far as money is concerned though, let's just use 12% for an example. That's easier math. So like that's 1% a month. So if you could take a property down for 1% a month, and let's say you do it in 3 months, which is the most aggressive I've seen someone do, like a fix and flip, is like 3 months end to end. That's even kind of aggressive. Let's say 6 months. That's 6% interest. So the thing is, if I'm paying, just easy math, and it is obviously like there's more to it, but like this is the simple way of looking at it. If I'm paying 6%, even 100% of the money, okay, if I'm paying 6%, then what does that mean? Well, if I'm making more than 6%, that's profit. I know it's overly simplified, but think about what the cost is. Your expenses and your cost of capital combined is your total cost. So essentially, when you say a great deal, like we got to say, what does that even mean? Because I want to go back to the concept of like preferences. If anyone's listening here wanting to get like 50% return in 6 months on a flip, well, that's probably not going to happen at all. Like not even right now, it's at all. If you're talking about 10, 15, 20%, like that's doable probably in deals where you could do value add and you could sell it, make that kind of spread on a net basis. But I would say, like, Michael, if you have something that you usually use, then I don't want to like overstep, but I have an analysis tool I can drop as well, a link for if you want, that will help people kind of analyze the deal. So if you check out runyournumbers.com, which is basically powered by a thing called Deal Check, runyournumbers.com is what we use on all of our deals. And literally, like, I've used that for my own flips. I've raised money with that tool. I've also coached my clients how to use it. That tool will show you dollars and cents and percentage wise, like down to the penny, basically, and percentage wise as well, what your deal actually has as a net profit. So I would say the first thing is, let's not throw it out. Let's not say, well, I have a great deal, but I don't want to pay that kind of money for the money. No, let's say, what if someone did though? Like, how much money could they make? And like, I'll give you guys a quick tip. If you can find a way for someone else to make, let's say $50,000, right? Let's say $50,000 net profit on them buying the deal, someone else, or anybody buying the deal, whether it's you or somebody else. How about we think of, like, I don't know if Michael, if we talked about this, but like flipping it around and saying, instead of saying like, I'm going to sell you this deal for X $1,000, 5, 10, $20,000, let's say, hey, there's $50,000 in this deal. How much would it be worth to you to buy this deal that you can make 50K in? Like, I've seen personally where I say it more of a wholesale partnership type strategy where it's like, you know what, there's 50K here. What if I took 15 or 20 up front and you take the rest of it at the end? Like, I'll get paid as a wholesaler essentially now. Like, that's because I show you how to get the 50K. So if somebody's sitting there with a deal in their hand, like, you're basically potentially going to walk away from 10, 15, 20 grand in that model. If you have a deal that can make 50 grand, there's somebody out there that will probably buy it for 10, 15 grand is what it boils down to.
Yeah.
It's the question of who that person is, you know?
Dude, I love that. And, you know, when you told me that, I'm thinking to myself, man, why didn't I think of this before?
Like,
Like,
we did talk about, I remember we talked about that sometime.
yeah, you told me about that, and I'm like, I'm selling my deals wrong. Like, I'm showing them, like, here's the opportunity, but the 50,000 sounds a lot more exciting than the 30,000 that the deal actually might be. But you have to work in your $10,000 to $15,000 spread to make it worth your while. But it still makes sense for them. And in the beginning, like, in my opinion, I'm more than happy to pay for a little higher cost of money to get myself into the deal to make a profit. I'll make $20,000 profits all day long even if I have to pay 18% money. I don't want to.
Right, exactly.
But it's totally worth it to get into a deal.
Yeah, the trade you're making by not doing the deal is more than it's costing you more by not doing it than it is by doing it. Essentially, is what it boils down to. And if you can't figure out how to do it if you can't do it as an operator, then you think of, well, how can I do it as a wholesaler or as a conduit to somebody else? And that's where you call up Michael, or you call up me to have a conversation. We figure out creative ways of structuring it where everybody wins. But yeah, I mean, that's one thing. Another tip I will give to the group is, like, if you get stuck in a negotiation with an investor or a seller, right? I like to say things like, are you willing to lose this over $5,000 or $10,000? Are you willing to not do this deal for $5 grand or 10 grand? Because you're leaving this much more on the table. Like, I mean, you don't do that in the first call usually. I don't, at least. But you can get to the point where you're like, all right, I'm showing you how to get to 50K and I'm asking you to pay me 10 grand. Like, you're going to still net 40 if that's the case, or even 60, and then whatever, they want to break the numbers out. But like, you're basically saying as a buyer that you're going to walk away from 40, 50 grand for not giving me 10. Like, that doesn't make a lot of sense.
Yeah.
You know? So like, how much are you willing to trade? Then you kind of measure it. And what I do is every time that I'm presenting a deal to an investor, like, this is how I think of it. And if I'm looking at one of my clients as a lender saying, like, what are they saying? Like, if they're going to walk away from that, it kind of shows me that they're not ready to do deals probably, or they're not ready to be one of my investors I want to call, because it means that they're not sure, they don't have courage, they're not ready to go, like, whatever it is, like, and that's okay. Like, they may not be ready, but they're not going to be the person I want to deal with on my deals. I'm trying to wholesale them, or if I'm trying to lend, like, I don't want to lend to somebody who's like, oh, well, I like this today, but I don't like it tomorrow, kind of thing, you know?
Yeah. I love that, man. That's some great advice, and that's a gold nugget. You guys should be writing that down and figuring out how you can sell the deal in that fashion. And right now, more than ever, I think, talking about a shifting market is when you have to have the skill set to be able to communicate these messages to buyers.
Right.
Before it was like, hey, how can I get the next acquisition? Now it's like, hey, are there some people who are going to buy this deal? I don't know. Right. Let's figure out how we can sell that to them to make it attractive enough for them to pull the trigger.
Yeah.
Because if you're throwing out emails, good luck.
No, emails is honestly, like, we do from time, but that's like 3, 4, or 5 years ago that was effective, because it's just too noisy, first off, and also the fact is that people that are actually buying don't really pay attention to emails. They want to get phone calls and texts, and really text for us is the most effective, and then we go to a phone call.
That's good to know. Yeah, we do some texting, but the most personalized message I've been preaching to my team is like, hey guys, we've got to get back on the phone. We've got to see who the real buyers are right now. Now that the tide has went out a little bit, who's actually buying?
Right, like, who's still in it, pretty much. Yeah, that's like when COVID happened, we're like, who's still lending? Like, that was one of my questions, like, who is still lending money? Because no one was lending money when COVID happened, pretty much. No one was really buying either. But it's a good idea. If you've been in the business for, like you're saying, this great piece of advice as well, I think. And we're going to do that's something we're going to take, I think, and use, because we have a pretty sizable list. We need to know who's actually still in it, like who's still in the game, you know?
Yeah, yeah, absolutely. I think that's one of the biggest things right now because we have a lot of deals on the table, and where our responses aren't as good, and I think a lot of it just became people are pricing deals too high, and then it just
Yeah.
burned out investors from even wanting to look at the emails because like, oh, it's just another one of these, right?
Yeah.
So by doing something to stand out from the crowd and making them feel heard and understood, and then also
Yeah.
presenting the deal to them, that goes a long way.
Yeah, and if you mind if I expand upon that a little bit too, I think something that we're doing right now, kind of in a way, like we're on video, right? So like we're talking, and so when you're presenting a deal, like, and if maybe the listeners don't feel like they could do this yet, but I bet you can if you think about it. Like Michael's sitting here, he told me a pretty large number of flips he's working on, which is very impressive. But like he has the decision of whether he buys a property or he wholesales it. That's up to him to determine that, not for the investor. So if he like that we talked about this too. Like I'll do this in my deals. I'll reposition myself in the sense of I'm giving them the opportunity. I'm not at a loss if they don't buy the deal. You know what I mean? Like I'm giving you this opportunity. You can be my partner for a day, basically.
Yeah,
You can take over where I left off. I did all the hard work. You could just take it over and you could take it to the finish line. Like finish the renovation, keep it, whatever you want to do with it. But it's an opportunity because if you don't, Mr. Investor Buyer, I'm talking to you about this deal on video. I'm not saying it these words. This is my underpinning though. If you don't, I'm going to take it on myself. Like I have the option to buy this. I'm ready to buy this, but you have to be ready to buy it also. So what does that mean? Well, that means I got to prepare. If I haven't done a fix and flip and I want to sell a fix and flip wholesale deal, I probably got to prepare myself. But check this out. It sounds like a plug for me, but it's really not. You might want to get a lender lined up to be able to do that. Like Real Direct Lending literally could pre-qualify you. And it's not very hard to get pre-qualified for hard money at all. Relatively speaking, there are some lenders that are very strict about certain things, but with us, like there's options available where literally it's your credit score and the fact that you don't have any like major, background check type issues. That's it pretty much. And the deal has to make financial sense. So if that is something like you're like, wait a second, that easy? Like it's not like going to the bank and getting a mortgage. You know what I mean? So it might be a good idea. It is a great idea actually to go out there and get pre-qualified and then say that's part of your ammunition as a wholesaler. I already got a lender willing to fund this deal, like 85 to 90%. And like our repositioning now as a wholesale company is actually showing people not the total cost of the deal, but actually how much capital they had to bring in outside of the loan that's available already. So we're actually marrying up the borrowing of through realdirectlending.com and the wholesale deal itself to basically pre-qualify the loan for the deal and then say, hey, as long as you have a minimum of this credit score, like 620, 640, and you have this much capital, you can buy this deal and create this much profit, basically.
I
So,
love that.
you know what I mean? That's like the next element. And after that, guess what? The next iteration is going to be, it's going to be like, hey, Real Direct Lending has investors willing to fund this deal. They need someone to operate the construction. Now we're going to be talking to contractors and construction people. And then after that, it's going to be, hey, we got the contractors too. So it's just like pretty
Vertical
much
integration,
like
right?
risk. You know what I mean? We're trying to get to like no risk. Everybody's there waiting to do the deal. You just got to sign the papers pretty much.
Yeah, and I can't tell you guys how important it is to have the ability to close. I can't tell you how many deals that we've had where we could have taken a quick, $5,000 profit, and that's fine. But when you have a operation, we're above 10 employees now, and we have a sizable operation to where we have overhead, right? And $5,000 profits are not that exciting. It's not really going to pay the bills, right? So
Yeah.
we know that we could maximize it. For example, we couldn't wholesale property recently. We didn't have a high enough offer on the table to make sense out of it. So what do? We took the property down, and we're going to list that property on the MLS, and that property will likely bring a much higher retail buyer to the table, and we'll make far more money. Or if that doesn't work, well, like Doug said, we'll have the ability to fix it up and then sell it to the retail buyer at a higher price. But it's so important. I can't emphasize it. You've got to have the ability to close. And
Yeah,
by having
totally.
pre-qualified, you have the ability to close.
Exactly. I mean, and pre-qualified will get you, just to be clear from my side at least, right? It's 85 to 90%, but that's still a lot more than 0%, obviously. So it's like, hey, if I got a little bit of liquidity, or if I got a friend or a family member or somebody that could lend that portion that I don't have. And that's what I said, like the next iteration of what we're doing is going to have some of those introductions in a more systematic and structured way where people like raise their hand, say, I'm interested in participating with someone who's qualified, wants to buy a deal. Let's get involved. Like I want to be notified about that. And then they can choose, the gap funders can choose like which ones they want to get into. That's like probably Q1, Q2 next year at the earliest, but that's coming soon. Fundamentally right now, it's like, hey, like the best thing anybody here could do if you don't know how the lending works, or if you could buy a deal or whatever, is like do what Michael said, get pre-qualified for the majority of the funds, right? And then have a conversation with Michael. Say, hey, Michael, what do you think about this? Do you know anybody, Michael, or do you know anybody, Doug, that can get me this other part that I got? Because I already got the main part, the lending part. I just need that other portion. And be like, yeah, well, if you need it, maybe I have somebody, maybe I'm interested. Maybe like you got to have those conversations. What does it all root back to, Michael? You know this answer. Like it's the people part though, right? The relationships.
100%.
So
100%.
I don't know. I don't want to like just keep going, but I got a couple stories, or at least one more I can share whenever you're ready. If you have another question for me, I got one about relationships though, to kind of give you an even better example of something that on a bigger scale, something that might be cool. But I want to make sure if you have one more, two more, whatever you got for me for questions.
Yeah, no, it's take it away, man. We have probably about 5 more minutes left, so
Okay.
we'll
I'll
wrap
make
it up.
quick.
Yeah.
Yeah. So check this out. So like, and I learned a lot more in this one particular deal, and I got to keep it kind of generic, but I'll tell you the story about what it is. So like somebody presented me with a deal to buy land in somewhere in New Jersey a number of years ago, like let's say about 4 or 5 years ago, I think it was. And I wasn't interested in it because I didn't know initially who I could have build on this property and run this project and stuff like that. But what I did is I said, you know what, let me not throw it away. Like just like you said before about throwing a deal away. Maybe I can't do it. I don't have the money. I can't do the deal, whatever. So I looked at my list. I said, who do I know that's a developer or builder? And I reached out to some of those people. Who do I know that can possibly fund this deal for the land purchase? And who do I know that can fund for the actual construction? I literally did that. And what I did is I built a team out of 4 people that did those 3 things, including myself as a 4th. And effectively, I built a model where I call it the hybrid wholesale, right? Where like essentially I get a piece up front and I get a piece on the back. So I got some money up front for building the team out. Essentially how syndicators work effectively when they do apartment syndications where they get an acquisitions fee or something like that. I got a little piece up front for bringing the deal, for bringing the team, and for connecting all the dots. And the thing is I stayed in the deal. And by staying in the deal, I'm going to make money, but I'm also learning a lot in the process. So if you're a wholesaler that's like kind of at that precipice of like saying, do I just continue to scale wholesale or do I look at getting to flips or bigger deals? Maybe you should consider like a hybrid wholesale, what I call hybrid wholesale, where you basically get a little bit up front. Maybe it's a little bit less than you normally do. In this case, it was still 20 grand because the deal was much bigger. You're talking about like a multi-million-dollar project. But essentially, I was able to get 20K up front as an acquisitions and team building fee effectively from the partnership that I created. And effectively in the middle of the project, there's nothing there for me. There is a developer fee for the guy doing development. But then at the end, I get something for helping participate in the project. So I just want to share that quick story. That's a very real life example where you could take your skill sets that you have, which is really me, it's like network and resources and willingness, and just combining that into making a team or running a project without having to do really anything. It's passive, essentially. It's not for me I don't have to do any work,
Yeah, I mean, the fact that you make money in that deal is just a cherry on top, really,
Yeah.
because the amount of things that you're going to learn through that are lessons that would have been really hard lessons to learn on your own, probably. And so
Right.
I love that, man. And I'm thinking the same thing is like, hey, we've done this, this, and this, but I haven't done that yet. And so because I haven't done that, I'm willing to give up a lot of profit because I know I don't want to do it myself because his
Right.
skill set is exactly what the missing link is here. So
It's the who, not the what, Michael, right? It's like, who do I know that does that? Not what do I do or how do I do it?
100%, man. So I have to mention it because I labeled this the becoming a deal maker in a shifting market. And I know you have a
Oh,
challenge
yeah.
coming
Yeah.
up. And I want to tell people about it, man, because I think it's pretty cool what you're doing. Giving people an opportunity to come learn for free.
Sure.
So can you tell
Appreciate that,
people
man.
about that?
Yeah, absolutely. So it's pretty close in proximity of our time. So the timing of this is good, but it's also maybe you might miss it. That's okay. If you missed the actual event coming up, it's next week. It's starting actually Sunday night, but it's really Monday general admission. It's Monday evening from 7 o'clock p.m. till 8 p.m. Monday through Friday. That's our general admission. It's free. It's the Deal Maker Challenge, right? The Deal Maker Challenge. And actually, that link right there is the one. If you want to be an affiliate, you could just do the Deal Maker Challenge if you'd like to. That's the one for people to register, but. Make sure you let me know if you can through Michael so I can give him a thank you as well. But the affiliate link I sent you there, that's what that one is. Anybody here that has a network of people, by all means, feel free to register as an affiliate. But thedealmakerchallenge.com is going to be the link you're going to want to go to register for free.
Yeah, so I'll post my link
Yeah,
because
there you go.
you're going to
Yeah.
give them a special deal, obviously, right?
I'll give them a special deal from
yeah.
coming from Michael. Exactly. Yeah. So
Yep.
you're gonna have something that's basically first off the admission itself is free, but there's a VIP upgrade. So anybody that comes in through that, it's gonna be $97 with Michael's link. And so basically that's gonna be for the 30 minutes before each meeting, and then there's actually a special bonus meeting just the night before we kick off the event, which is Sunday night. So Sunday night's gonna be, I think it's 6:30 also. That's Q&A. So if you want to dive a little bit deeper about the topics we're talking about here, other stuff, whether it be wholesaling, finding deals, analyzing deals, borrowing money, investing capital, partnerships, deal structure, all that kind of stuff. Each day has had a different topic or topics. Essentially, we did this back in August. We had a little over 100 something people in the event. Helped a lot of people really figure things out. It's not just informational; it's actually actionable. So the stuff you get at the event, you can go put into action right away. And hence why we call it a challenge. We want you to put a deal together or start working on a deal in the week that we start, talking about how to do it. So essentially figure like each night is like a chance to check in and kind of like talk about how the day was a bit in the Q&A, how you use the information from the night before. And then really by the end of the week, you should be in a place where you at least know how to do a deal from soup to nuts. And you can go start putting stuff together with sellers, with wholesalers, with investors, that kind of thing. But that's next week, the Deal Maker Challenge. That's right. Yep.
Awesome, man. Well, I'm going to make sure to get this published before next week. That way people can
Excellent.
partake in it. Yeah, if you're listening to this on the actual podcast version here. But no, man, this is awesome. Great opportunity. People got to take advantage of this stuff. It's free content, unless you upgrade, of course. But no,
Yep.
I think it's an amazing opportunity.
Yeah.
It's a no-brainer to get yourself there and learn.
Michael, you know, one thing I'll throw in for your guys as well to be, I think, a good bonus is that anybody, because you mentioned before how can they connect with me, so I don't want to make it too difficult. But if you come through Michael and you go to the site that I'm going to give you in a second, which is going to be the Dealmaker Challenge that you register, but the site I'm going to give you guys is my personal scheduling link, right? And I'm going to give that to everybody. So I'm putting it here for Michael. You have to put in the actual submission that you can for Michael. So I give Michael a thank you, but meet.douglasjbeck.com. I'm going to give everybody that does that a 15-minute session for free. 15-minute strategy session. I'm usually giving that to people that are either clients or that are looking to become a client. But because of Michael and how I know him, and just put in there, I know Michael McDonald. I heard you on that podcast thing. That's another way to do it. Meet.douglasjbeck.com. And basically that the purpose of that might just be, well, I don't know if I should do the Deal Maker Challenge. I mean, it's coming up pretty quick. Or if you're in the middle of that week next week because you missed it or whatever, you didn't hear this right away, whatever the case is, if I can help you, if I can serve you and give Michael a thank you, we could work together to help serve you in some way. That's the best way to do that. So Michael, feel free to use that as well if you'd like to post anywhere. Anybody who's in your audience is welcome to schedule those 15-minute calls.
Fantastic, man. I'll make sure to drop that in the comments here. But no, this has been awesome. I know we got to wrap it up here, but thank you so much, Douglas. I appreciate it so much, man.
Thank you.
I know the audience is going to get a ton of value from this. So
can't wait to meet everybody and talk soon.
Yeah, absolutely. So make sure to share this, guys, if you got value. Like, share. We do this for free. I love talking real estate, so it's not work for me, but I do appreciate it if you guys, of course, share it and tell some friends about it. So I guess with that being said, that's all for today, and we'll see you guys next time.
Thank you, Michael. See you, man.